Hello, my name is Chad Hart. I'm an extension economist at Iowa State University. And every January, USDA provides us the final numbers on the production set that we saw for the previous year. So this year, they've released the final numbers for the 2023 crops, and I'd like to go over with those with you today. Now, as we look at what USDA found, the general storyline is this, is that as we're looking at the 2023 crop. What they sort of found was that, big crops do tend to continue to get bigger. And in fact, that was the major surprise, if you will, within the reports, is just how much growth that they saw for both the corn and soybean crops. As we look at the corn crop, what they ended up finding was they did find that acreage was not quite as high as they had originally expected there. They ended up lowering actually corn planted area by 300,000 acres. But given that they found a yield that was 2.4 bushels higher than what they had previously estimated, that more than offset that loss in acreage. And so by the time it was all said and done, they ended up adding over 100 million bushels to the 2023 corn crop. And as you can see here, that meant that we got to a record corn crop of 15.34 billion bushels out there being produced. So plenty of corn for the markets to work with. Now, usually, as USDA increases production, they also look to see increase in usage, and we did find that as well within this report. They ended up adding 25 million to the feed and residual line there, bumping that up to 5.675 billion bushels. And I think a lot of that growth that they're seeing there is because we are feeding out more heifers in the beef market to try to keep beef supplies up. That's leading to some short-term gains there, but I do worry about that as we look forward. But the bigger area where they saw more corn usage as we're finishing out the 2023 marketing year is in the ethanol market. They ended up adding 50 million bushels there. And so we've seen a rather strong rebound in ethanol production, especially throughout calendar year 2023. And so that's led to corn usage well above what we've experienced since COVID hit. And so those two combined added 75 million bushels of usage, but that wasn't enough to fully offset the 100 million bushel gains in production. And so with exports being held steady at 2.1 billion bushels and no growth on the food, seed, and other categories, well, that meant we ended up adding to ending stocks. We basically ended up adding about 30 million bushels there. And so we're looking at over 2.1 billion bushels of corn being in storage by the time we get to next August, which is up over 800 million bushels from where we had been for the past couple of years. With those larger corn supplies sort of overhanging the market, that has led to a fairly dramatic drop in prices over the past year, with USDA now averaging their season average price estimate for 2023 at $4.80 a bushel, which is 5 cents lower than their previous estimate. So they've continued to work that down. And to me, the key feature is the 480 is below our estimated production cost going into the marketing year here of $5. So with corn now looking at a slight loss as we look into 2024, we're expecting a little less planting of corn, and that's what USDA has sort of marked up as its first line estimate here. But the challenge will be, even with the smaller acreage, we're likely looking at another 15 billion bushel corn crop coming down the line. So we'll need to see some usage growth over time. So that's why, as I look into 2024, I'm really watching the export line to see if we can get some additional intake from there to help alleviate the building of stocks over time. Now, when you look at the soybean table, again, a very similar tale. What they end up finding was a little less acreage, especially on the harvested side here, but a higher yield, in this case going up by 7/10 of a bushel, which ended up adding to production. They added 36 million bushels here to the total. So we had another strong soybean crop. Now, it wasn't the record that corn was, but still, anytime you're talking about north of 4 billion bushels in the soybean market, it's a good sized crop. But unlike in corn, they did not really change the usage that much. In fact, they left the two big categories, soybean crush and exports, completely the same. What we saw was a very small adjustment in the seed and residual line. So that by the time you get down to ending stocks, we're adding to them basically what was added to production, which means that we watched ending stocks grow like we saw in corn, and that meant that season average price declined. just as we saw in corn as well. And so here we're adding 35 million bushels to the ending stock total, so it's bringing it up to 280 million bushels there. But that's only up slightly from where we've been the last couple of years. In fact, as you look at the soybean market, it remains a really tight market where you're talking about ending stocks around 5 to 6% of, in terms of a stocks to use ratio. So a really tight market. But the idea is with increased competition outside the US, that helps pressure prices down here as well. And so you can see that season average price for 2023 is down there at now 12.75. It's 15 cents lower than their previous estimate and $1.45 lower than what we captured in 2022. So both corn and soybeans have taken a step back here as we look at the 2023 marketing year. Now, with soybeans, that 12.75 is a little bit higher than our production cost coming in. And so there's a little bit of profitability left here, which is leading to the expectation we will see more soybean area planted in 2024. Now, as we look at this year's yields across the countryside, the idea is USDA did make some changes here, especially in the areas where the drought was hitting. We did see some of those states that are sort of in pink and red here get a boost in yield, along with Iowa. Iowa had been at basically no change at a 200 bushel per acre average. They boosted us up to 201. But the idea is you look across the nation, what we had were stronger yields, especially across the Great Plains and throughout the eastern side of not only the Corn Belt, but the Southeast, where we saw that, combination come together to create a record corn crop across the nation, as we averaged 177.3 bushels per acre, which does set the record now. Along with that, though, Indiana, Ohio, South Carolina all set records. And again, very strong yield growth as we look at the plains. Now, as you move over to the soybean side of the ledger, not a record crop, but a really good one as we look out there. And it's a very similar pattern there. As you look for those records, Indiana, Ohio, South Carolina kick in again, but here you can also add Arkansas, Tennessee, Mississippi, all setting records this past year. Again, improvement along the Great Plains. Here in Iowa, we took a half a bushel step back, averaging 58 bushels per acre. So overall, good yields across the nation despite the drought problems that we had. But our problem is that with the big crops that we have, we're also finding there were big crops outside the US as well. And in fact, as USDA looks at the world corn crop for 2023, it's a record whether you're looking at the world total, the US total, or basically outside the US total. All of those set records in 2023. One of the big things we've been watching, though, is, okay, where are we seeing that growth? Well, specifically with this month's report, a lot of that growth was due to the improved crop that we saw come out of China. They had been struggling with drought problems like we had, and sort of like our crop continued to get better as harvest rolled along. Seems that the Chinese crop was doing the same thing. So you can see a fairly sizable jump in production is being shown there. But the other wild card here is we've been watching Brazil, and that has been the storyline more in the soybean market than in corn. But it matters for both because we have been seeing growth in South American production over the past several years. Now, Brazil is dealing with their own weather problems where they've been having sort of extreme weather swings, where they've been going for hot and dry conditions that have been followed up by substantial rains. And that has not only created some production problems for the crop that's in the ground right now down there, but is setting up some timing issues as they look at their second crop plantings coming up later this year. And so with that, USDA has started to downgrade that Brazilian crop. As you can see here, they lowered them down 2 million tons on the corn side. And when you look at soybeans, same sort of thing there. They lowered them 4 million tons here. So those weather impacts are starting to show up in the South American production. But again, world supplies are large. As we look at soybeans here, 2023 world production, a record. So we continue to see a lot of supply overhanging the market right now. What that has led to when you look at our futures market is that we have been watching these prices that have worked their way down throughout 2023 continue that slide as we enter early 2024. Now, what's interesting to me as I look at the futures market is I'll describe the market as being more pessimistic about the 2023 crop, but more optimistic as we look out towards 2024. So in this graph, the green bars show you the futures market prices as we look out, for the next couple of years here. Basically, the prices to the left of the black line, that's for the 2023 crop. To the right, it's for 2024. And then the big numbers there in black are showing you futures priced season average price estimates that you would get from USDA. So in this case, USDA for the 2023 crop has a price of 480. Right now, the futures market's pricing around 460. But again, pessimistic about seeing additional sales, at least right now. But as we look out to 2024, the market becomes more optimistic. USDA's 2024 early estimate is $4.50. The market's at 475. So the market, I believe, is factoring in those, the drought conditions that are still here, but it's also factoring in the export opportunities that seem to be building, especially if Brazil is starting to see some weather impacts down there, leading to a little bit stronger price as we look out there towards the next crop. You can basically tell the same story again for soybeans. As we look at 2023 versus 2024 crop, the market right now is more pessimistic about 23 and optimistic about 2024. 2023 USDA's price, $12.75. Right now, the market's at $12.25. But as you look at 2024 crop, USDA's at $11.30 and the market's at $11.70. So the market is, again, factoring in a little bit better prices out there as we look towards 2024. At the same time, too, it's also factoring in that it is expecting more area to be planted to soybeans for 2024. Now, what we're sort of going through here right now is an adjustment, especially compared to the strong prices we had coming out of the 2022 crops. When you look back at that year, it was an amazing year in that what we had was very strong profitability throughout the entire marketing year. In this case, the green and the yellow lines here represent the futures-based season average price estimate that we get from looking at the markets. And I want you to compare that to the big black line that's drawn in here at $4 on the left-hand side for corn and $10 on the right-hand side for soybeans. Those were our production cost estimates going into the 2022 crop. So as you can see here, we had profitability throughout the year. And when we see profitability throughout the year, what farmers tend to do with those captured profits is they reinvest them in agriculture because, let's face it, that's how we generated these profits. But by reinvesting, we're doing two things to these lines. One, by reinvesting, we're driving up those input costs. So the black line goes higher. At the same time, too, as we're reinvesting, we're putting more effort into production. That tends to mean we raise production. And as we raise production, prices tend to lower. And so we tend to see the green and yellow lines decline. Well, that's exactly what we've gone through here so far as we're halfway through the 2023 marketing year. We have watched the black line go up from 4 and 10 to now 5 and 12. And we've watched those green and yellow lines sink back down towards that. In fact, corn has fell below production costs. Soybeans is hanging on to a little bit of profit as we look out there. Now, as we begin to look forward to the crop we're about to plant this spring, given that we've adjusted these prices down and, if you will, prices have come back down towards cost, that also does help alleviate some of the cost price pressure we've experienced, especially in the case of articles like fertilizer and fuel. And so as we're looking into the next crop, what we have seen is our production costs come back a little bit. That line now is standing at 460 as we look at 2024 corn and 1125 as we look at 2024 soybeans. And you can see what that has meant is as we're looking out towards next year's production, as we're looking towards the next crop, we do see still a window of profitability out there. Much smaller than what we had with the 2022 crop, but definitely, let's call it a better picture than what we're seeing currently with 2023. So it is setting up where, if you will, we've come out of those really strong income years of 2021 and 2022. We've worked our way back down towards what I call normal, where prices are around production cost. And that's sort of ag's soft landing after we're coming off of those really strong profits, because usually we're used to fairly large ag cycles where we swing from significant profits to significant losses. In this case, it looks like we've tried to come back down more gently and land around break even, which hopefully holds as we move through the rest of 2024. So with that, I'm going to stop my sharing here, as that concludes what we saw out of the USDA reports for mid-January. Looking forward, I would say one of the things I'll be watching throughout February will be our export pace to see if we're gaining some of those international sales back. And then the next really big report will be the reports in March as we look at prospective plantings for the 2024 growing season. With that, again, my name is Chad Hart, Extension Economist with Iowa State University. Thank you for your time tonight.